From the TraderGuy.com, this is Chris taking a look at the 2025 year in currencies. So I will go through some major currency pairs in this video and give you my thoughts, as it is that time of year and everybody's asking what comes next. The theme of 2025, at least in the first quarter, is going to be very dollar positive. So keep that in mind as I go through these charts. The US dollar against the euro has been quite an example of how low can you go. And I think you've got a situation here where as we begin to wrestle with the 1.03 level, if that gives way, I fully anticipate that the euro will hit parity again. In fact, I've already got money on it, so we'll have to see how that plays out. Any rally at this point in time, I believe, will be a selling event, especially the closer we get to the 1.06 region, which I think will be a huge barrier. If and when the euro can recapture the 1.06 level, then I think we begin to start to think about re-entering the range for most of 2024. But really, at this point in time, 2025 looks pretty bleak for the euro. There are plenty of reasons for this, not the least of which, of course, would be interest rates in America staying strong, but we also have no confidence votes in Europe. We have a land war. We have an ECB that's becoming increasingly dovish, and a weak economy. So I think that all ties together for the euro dropping. The British pound is a bit of an anomaly because we're right around that 1.25 level. And while this is a negative market, it's not drastically negative like we had seen in so many other major currency pairs in late 2024. So honestly, I think the real trade here is not to trade the pound against the dollar. It's to trade the pound against pretty much anything else. The reason's twofold, because the pound is basically your second place currency at the moment. So if you perhaps go pound Aussie, pound yen, whatever, you are going to more likely than not see the pound depreciate against it. But if things were to turn around, with the British pound being stronger than many other currencies against the US dollar, or at least maybe I should say less weak, it makes a lot of sense that if the US dollar turns around, the first place you're going to see strength is in the British pound. Well, if you're already long pound Swiss, that should only help your argument further for your trade to work out. So again, I think it's not so much about trading the pound against the dollar. I think it might be a nice backdoor way to play some type of potential turnaround in this pair via even weaker currencies. We'll just have to wait and see. The US dollar against the Canadian dollar is getting to the point where we are going to threaten 1.45. If we can break above 1.45, 1.4750 becomes a target. Short-term pullbacks continue to be buying opportunities in the dollar against the Canadian dollar, and I see no hope for the loonie at the moment. That being said, it is a little stretch. Don't be surprised if we have to go sideways for a while. The US dollar against the Swiss franc, the rubber meets the road up here right around 92. We get to the 0.92 level and the dollar continues. This is going to be the mother of all trades, as we will go to parity. There's a very real possibility of this happening. Keep in mind, the last time the Swiss National Bank got together, they cut interest rates by 50 basis points. Twice what was expected. That, to me, sounds the alarm bells. And why wouldn't it? 85% of Switzerland's exports go into that basket case known as the European Union. They're in trouble because their neighbors are in trouble. That being said, the Swiss franc is a little bit of a safety currency, so this would be more like a slow-moving train wreck. Short-term pullbacks are going to be buying opportunities in this pair as well. And it's really not until we break back down below the 0.8750 level that I might consider the idea of a breakout dead and gone. The dollar against the yen will probably grab a lot of headlines this year. I think by the time it's all said and done, we do break to a fresh new high above the 161.50 area. That being said, the Bank of Japan will jawbone this from time to time, and you might very well see a move like this. Maybe they shock the markets and raise interest rates 15 basis points. That gets people worried. People start unwinding the carry trade and all of that. And then eventually reality sets in with the Japanese debt to GDP ratio like 257% or thereabouts. There's really nothing the Bank of Japan can do. They can't tighten monetary policy too much because it will destroy the economy. There is a little bit of inflation in Japan, so they have to somewhere thread the needle, but it's not going to be anywhere near the Fed. And you must keep in mind that the Fed looks likely to stay higher for longer as far as rates are concerned. That's like rocket fuel for the US dollar. So I do think you continue to see every time we get a significant pullback, there'll be people willing to jump in and buy dollar yen. I wouldn't be surprised at all to be at 165 by the end of the year. The Australian dollar is the biggest basket case, with maybe the exception of the Canadian dollar that I follow as far as major currencies are concerned. New Zealand dollar, there's a question as to whether or not that's a major currency. I would have done the analysis on that, but it's the same as this. This is a train wreck. So when you look at the Aussie on the monthly chart, you can see just how aggressively to the downside it's been. And on the weekly chart, what's important to pay attention to is we did close the last week of the year below 0.62. This does open up the possibility of 0.60, which I expect to see probably sooner than later. I'd be stunned if by the end of February we hadn't hit that level at least once. If we break down below there, then you start talking about 57 cents. So very bad days ahead for the Aussie. Rallies at this point in time. In order to even consider this a changed trend, we would have to break back above the 0.65 level, which at the time of recording is about 3.5 handles above or so. And if that were to happen, I'd also want to look at what the US dollar is doing against other currencies. So in short, it looks like the US dollar is going to continue to strengthen, especially with the 10-year yield right around 4.5%, despite the fact that the Fed cut interest rates by 100 basis points this year. And now the Fed is suddenly starting to talk about the fact that they may not cut as much as originally expected. I think we have another several months, if not another year, of US dollar strength. Somewhere in the middle of the year, you may see a shift, but I think clearly the year 2025 is probably going to be another year that favors the US dollar, at least initially. It's a little murkier once you get out there after 6 months, but really at this point in time, with central banks around the world cutting rates and they all sound dovish, I think the bulk of the year works out in favor of the US dollar. My name's Christopher Lewis. I run a site called thetraderguy.com, and you may have seen me at various websites. Happy New Year to all my trading friends, and remember, trade well.